The market plunged for a second day in a row. Will it continue to decline? I will be telling you what my DP indicators are telling me. My name is Erin Swenlin from DecisionPoint.com, filling in for Dave Keller, and this is the final bar. Hello, Erin Swenlin, as I said, from DecisionPoint.com. I'm filling in for Dave Keller today. Very excited. We had such an incredible market day with another plunge. So I think this is going to be a great time to wrap the week. All right. So the first chart I'm going to show you is, and I apologize if these are a little small, they're set up for me at Decision Point to write my blogs for the Decision Point Alert and Decision Point Diamond. So they might be a little bit small, and I apologize for that. As you can see, the market, actually, I want to get a more recent chart going here because it's showing the market still open here. All right, so we had a second day of a decline, another really difficult one. This took out more support. We're seeing a very strong support level right here at this top, these lows, these tops, this low. All those touches, what it means is that the market passing through this support level is a very strong breakdown. We really didn't want to see this, but it certainly does suggest that more days are on the way for the downside. My PMO is in decline. RSI is negative. Look at the volume, the negative volume we had today. This is actually, I think, going to be good news, and I'll explain that just shortly. We do have some of the indicators you're going to see on our charts that are not updated. We have to wait about 2 hours after the close for Decision Point indicators to all gel and get onto those charts. We should have some maybe by the end of the show, so we'll see. But in any case, we can see the VIX just absolutely plunged beneath its lower Bollinger Band. We do invert our VIX because we think oversold should be on the bottom and overbought should be on the top. When we get these punctures, though, typically you're going to see a little bit of a rebound, or in the case back here, everything was looking pretty bearish. So you can see that we did get consolidation, but then ultimately went lower. I'm afraid that's probably what's going to happen. We're most likely going to get what we call a climax day, but I'll talk to you about that shortly. So the first one is here. This is what actually Dave encouraged me to make when I was on the show Wednesday for my interview. He made a chart using just the closing prices. And at the time, that rising trend line was holding up. Of course, it was taken out today, and I think it was actually taken out slightly yesterday as well. And this is a bearish rising wedge. So not a surprise to see that drop, but getting that close beneath 390 is a big problem. Notice also that PMO moving below the zero line, also bad news. And of course, stochastics in the basement right now and still falling. So the climax chart I wanted to show you, this has been very helpful to us as far as determining what might happen over the next day or two. I don't have it marked, but yesterday you can see we had climactic behavior. We had those volume ratios on the NYSE and the S&P down up volume ratio. Both of these volume ratios just killed our 3.0 level. And so that we considered a climax day. You can also see that net advanced declines and net advanced decline volume was way off kilter. So what we normally would look at, and what we also decided yesterday, is that it was a downside exhaustion climax. However, we also discussed that we did not think it was going to resolve to the upside as many of our downside exhaustion climaxes will. And mainly because we had that giant, big, bearish engulfing candlestick, which was a huge problem for us So we're probably going to see more climactic behavior today, and more than likely it will be an extension of that downside exhaustion climax. So I am expecting a snapback here. I don't think it's going to be big. I don't think it's going to be something that will catch fire and continue higher with a rally, but we're due for this snapback. This was a really big pull, and like a rubber band, it needs to be released and snap back toward that original breakdown point here. So I have been telling my subscribers, we had our subscriber only DecisionPoint diamond mine this morning. And what I was telling them is that we probably will see some movement to the upside. And that might give us all an opportunity, if we haven't already shed some of our more aggressive positions. I think it's going to give us an opportunity to sell on some strength. But I don't know that we're going to have enough strength to really pull us up and out. And why is that? So I talked about my short-term indicators, the Swenlin trading oscillators. I talked about them on Wednesday, and we'll talk a little bit more about them in Mailbag when we get to that. As you can see, we do have the Swenlin trading oscillators tumbling lower. There's no way that they're going to move higher after today's close. I don't see it. And you can see these participation indicators that we look at are really in the basement as well. So percent stocks above their 20-day EMA, we have less than 15%. That was as of yesterday. I am sure that number is going to be worse today. And only 8% of the S&P have rising momentum. That is not going to turn a market around and start a bull market rally. So we do have to be concerned about that. But on the flip side, they are very, very oversold, and they generally don't spend huge, long time periods of time in that oversold territory. So another reason why I'm thinking we might look for a snapback on Monday or Tuesday. I don't think we're going to continue to see the plunge we saw today. It's time for a snapback. The intermediate term indicators are certainly telling us, as is the Swenlin trading oscillators, that any kind of upside that we do see next week is likely not going to be, it'll be short-lived and not likely to take hold. Let me add the Zoom thumbnail here so you can see these a little bit better. There we go. So you can see that they had started up. And actually, I want to show you a different chart with both the STOs, the Swenlin trading oscillators, and our ITBM and ITVM. And you can see when we were having the 2 down days that occurred right here, the Swenlin trading oscillators started up. And so I notified my Twitter followers, if you do want to follow me, it's _DecisionPoint. And I noted that we had 2 days where the STOs started to rise even as price was declining. And I said, this is time, we're going to get a nice move to the upside. And sure enough, we were able to eke out 3 days of upside. But after that third day, we did start to see at least our ITBM and ITVM started to fall. And you can see right here where the Swenlin trading oscillators also started to fall. And that was our warning that more than likely the up leg was done and we were in for some more downside. Certainly the Swenlin trading oscillators are not oversold and could get more oversold. So that's why I'm thinking short term and even intermediate term that we're going to have an issue as far as more downside. And finally, I'm going to finish here with my bias chart. And this includes our Silver Cross and our Golden Cross indexes. The Silver Cross Index and Golden Cross Index are DecisionPoint's own exclusive indicators. They basically keep track. Let's start with the Golden Cross. The Golden Cross tracks how many stocks have a Golden Cross. And recall, Golden Crosses are when the 50 crosses above the 200-day moving average or exponential moving average, which we choose to use. So you can see that the Golden Cross Index tells us that there are more than half of the stocks within the S&P still holding very nicely with 59%, but it's also that Golden Cross Index is starting to fail. And with the percentage of stocks above their 50 and 200 being so low, much lower than what we see here for the golden cross, we know the golden cross will continue lower. Because with EMAs, one of the brilliant things about them is if price is above the EMA, it's going to rise. If price is below the EMA, it is going to fall. So if we don't have enough stocks with price above their 50 and 200, that means they're all being moved down, all of those. And so we won't see the Golden Cross Index improve. The Silver Cross Index is a real problem. A Silver Cross is a 20 and a 50-day EMA positive crossover. This counts how many stocks within the S&P, what percentage have a 20 above their 50-day EMA. And as you can see, it's less than half. And given that we have such low numbers for stocks above their 20 and 50-day EMAs, we know this number is going to continue to deteriorate. And when this indicator is deteriorating, the market is weak. As you can see, here's a decline in that indicator, and we kept seeing the decline going on here, a small decline back here during the decline. It's a pretty obvious look and a pretty obvious indicator to keep an eye on, but the Silver Cross Index and Golden Cross Index are really our jewels right now at DecisionPoint and have really made a difference, particularly when we do combine them with those Swenlin trading oscillators and the ITBM and ITVM. All right, we're going to go to a short commercial break. I will be back. That concludes Wrap the Week. So stay tuned for Mailbag. Welcome back from the commercial break. Again, this is Erin Swenlin from DecisionPoint.com, filling in for Dave Keller today. I want to welcome you back, and we are going to go ahead and start with the Final Bar Mailbag. I'll be answering your questions and those you have sent in. But first, I'd like to encourage you to send in more questions. Dave is always looking for questions, and they will be answered live on air. The email that you want to send those questions to is thefinalbar@stockcharts.com. You can tweet us at finalbarsctv, StockCharts TV, or you can put a comment below if you are watching this on YouTube. Also, I'd like to share the guests that Dave Keller will be interviewing next week. It's a power-packed week on the Final Bar. On March 15th, he'll have Ryan Dietrich who is the Chief Market Strategist at Carson Group. And then on Thursday, March 16th, he'll be speaking with Mish Schneider, my very good friend of Market Gauge. I'll have to tune in for that one for sure. But let's go ahead and continue on with the Final Bar Mailbag. All right, let's look at our first question. What is your observation of RIVN? Is it a double bottom? Any signs of life from institutions? Well, I will start off with, I don't follow the institutional money flows, so I really couldn't speak to that as far as RIVN, but let's go ahead and look at the chart. There it is, RIVN. Okay, so double bottom. I can see where you're looking for this, but we do not have a second bottom yet. And to be honest, I did a chart pattern workshop just last Wednesday. And one of the keys that you need to remember with chart patterns is they aren't really a chart pattern until they confirm. So this, first of all, we don't have the second bottom coming up here yet on RIVN. Of course, my indicators look pretty terrible, but we'll talk about that in a moment. Let's talk more about the double bottom. So even if we do see a rally here to start to form a second bottom, it will not be considered a double bottom until you get the confirmation with a breakout above this level of about $22. So first, we need that second low, which doesn't look like we're going to get. It looked like maybe when that question came in, we were seeing a little bit of a rally, and we might have been considering a possible short-term rally to set up that second bottom on that double bottom. But no, I'm afraid I don't see a bullish double bottom here. What I see is a lot of bearish activity. We have a breakdown here on, even though we had a higher day, you can see back here, after the decline, it still did not get us back above prior support. and then we followed it up with 2 down days. The price momentum oscillator topped below the 0 line. I don't like to see the price momentum oscillator top, but I particularly don't like seeing it when it tops beneath the 0 line. So that's a big problem as well. And the PMO is still continuing lower. It is not oversold yet, so it could travel much further downward. RSI negative, stochastics below 20. That tells you there's lots of internal weakness going on here. So looking at it from the technical analysis purist that I am, I would have to say that this chart does not look healthy and that we are probably going to see more downside. All right, question number 2. Are the Swenlin trading oscillators available to StockCharts subscribers, and how can I access them? Yes, they absolutely are available to you. There's a couple of different ways you can get to it. The short-term way, the easy way, is to just use the symbols for the STO. And that would be exclamation point B, STOB, SPX, exclamation point STOV, SPX. So those are the 2 that you would want to put under your chart, and that will add them to your chart. And they should look like this if you go ahead and make sure that they are a histogram. And we use the color green. That will be it's an up-down pair, so that works out pretty well. So this is how you could add the Swenlin trading oscillators to any of your charts. Remember, these are market indicators. So adding them to the bottom of your stocks chart is not going to work unless you just want the context of what's going on in the major market at the same time. So I find that the Swenlin trading oscillators do better on a chart with the S&P. Now, there are more than just the STOs for the S&P. And the way you'll find those is exclamation point. That's what all of our decision point indicators start with. And then STO. And you can see all of the different STOs that we have available. Click more results, and you're going to get every Swenlin trading oscillator for volume and breadth all the way through here. So highly recommend you check that out. There's one other easy way to add if you like the decision point charts. Currently, these chart lists are free, so take advantage if you are at all interested in them. But if you go to your account and go to managing chart packs, we have 1, 2, 3, 4 decision point chart packs. And the one that you would want to get, there are 2. You could use the straight shots chart pack to get the Swenlin trading oscillators, or the decision point trending condition chart pack. This also includes all of our other indicators currently. So you'll be able to get to that, but more than likely it's not going to look exactly like the chart that I just showed you. So be prepared for that. I never really looked at what was going on in the market today. Live show, you make mistakes. But you can see the market did plunge. Really, the small caps and mid caps really hurting the most. Real estate getting hit very hard. Yesterday, we talked to our Decision Point Diamond subscribers about getting into the inverse real estate sector ETF. So that was for my ETF day. That was one of the ETFs. All right. So question number 3. Erin, what does your toolkit say about Bitcoin here? Do you have a price target? And yes, I do. Bitcoin looks terrible right now. I was already expecting the breakdown that came here because we had that bearish rising wedge. And now when I look at this after the breakdown from this very strong area of support, this level needed to hold, and it did not hold. And as I'm looking at this, I notice that we have a double top as well. So Bitcoin, if we go by the measurement for the double top, which is you take the height of the pattern and subtract it from the confirmation line, that's basically going to take Bitcoin down to 18,000, 18,200, basically back to this support level. So that is my price target. I do believe we're going to still see some trouble. We had trouble over the FTX debacle, and now it's having trouble over the Silvergate fiasco. So we'll more than likely see more downside here from Bitcoin. Oh my goodness, I can't believe it. My time is up. We have to end Mailbag. We have to end the show. I want to thank Dave for having me in to host for him while he was gone. And I welcome him back next week. I know you all will be excited to see him. I would also like to invite you to come check DecisionPoint.com out. We have the Decision Point Alert, Decision Point Diamonds, which I talked about today. I also can be followed at _DecisionPoint. I'm on LinkedIn and Facebook. That's all I have. Good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.